Hey, what's going on, everybody? Welcome back to the channel all about real estate. My name is Lewis, and today's video is going to be awesome. We're going to be talking about why sellers are rushing to bring their properties to the market as buyer demand weakens. And we're going to be going over all of the data and a housing market update here provided by REDFIN. Now, if you are new to the channel, please consider hitting that like button and that subscribe button right there. And if you haven't done so in the past, please consider leaving a comment. Your comments really help me as well as others learn and grow. And without further ado, let's jump right to the article. All right, so up on the screen, I have the housing market update from REDFIN, and I'm gonna go ahead and link to this in the show notes, but let's go ahead and run through this. So it says here that home buyers finally start to notice signs that the market is shifting toward their favor. More sellers came to the market during the 4 weeks ending May 15th. New listings climbed nearly twice as fast as they did this time last year, and the share of listings with price drops rose to its highest level in 2.5 years. Home buyers continue to pull back in the wake of record high purchasing costs. And of course, they're talking about mortgage rates here. Mortgage applications fell to their lowest level since May of 2020, and the number of home buyers touring and offering on homes as measured by the REDFIN Home Buyer Demand Index posted its largest annual decline since April of 2020. Still, desirable homes are getting scooped up at a record pace. Now, according to the REDFIN chief economist Daryl Fairweather, rising mortgage rates have caused the housing market to shift, and now home sellers are in a hurry to find a buyer before demand weakens further. Not only are more homes hitting the market each week, but sellers are dropping their price at rates not seen since before the pandemic. This sudden pressure on sellers is good news for those home buyers who can still afford to buy at today's higher mortgage rates. These trends point to an even cooler market this summer. So I'm actually starting to see this locally in the Sacramento market. Home price reductions are actually up about tenfold just within the last 30 days. And obviously a big part of this is due to the rising cost of mortgage rates. So these higher rates is kind of creating some sort of demand destruction. There's still plenty of buyers out there that would love to purchase a home, but the sad truth is that it's becoming more and more unaffordable. And as a result, it's causing buyers to drop out of the market and put their purchase on hold till further dates. Now, part of the problem here is that keeps them in the rental market, and there's not a ton of rental inventory. So it's also driving the price of rents up pretty dramatically in the local market here as well. Now, a few interesting points here. These are leading indicators of home buyer activity. Fewer people actually searched homes for sale on Google. Searches during the week ending May 14th were down 11% from a year earlier. Now, the seasonally adjusted REDFIN Home Buyer Demand Index, this is a measure of requests for home tours and other home buying services from REDFIN agents specifically. That's actually down 8% year over year. That's the largest decline since April of 2020. That was right around when the everything kind of went on pause there during the pandemic. Now, it goes on to say that touring activity is down 25 percentage points from the same period in 2021. And that's, of course, according to the technology company ShowingTime. For those of you who don't know, ShowingTime is actually a company and a service that real estate agents use to schedule showing appointments. So it looks like home tour and home showing requests are down across the board. Additionally, mortgage purchase applications were down 15% from a year earlier, while the seasonally adjusted index decreased 12% week over week during the week ending in May 13th. Now, for the week ending May 19th, 30-year fixed mortgage rates decreased slightly to about 5.25%. So we did see a small reprieve in the mortgage interest rates. Looks like they're stabilizing just a little bit. We'll have to see how the weeks unfold from here. If we pause for a second and we take a look at these leading indicators, what they tell me, or the way I process it, at least in my own brain, is that we have buyers that are simply dropping out of the market. They're putting their purchase on hold. And in my mind, I would imagine it has a lot to do with affordability. So they're no longer going out and touring properties, and they're no longer applying to get pre-approved for a mortgage because the cost to borrow is so high at this point, while prices still remain elevated despite some of the recent price decreases that we have seen. Now, the article goes on to do the key housing takeaways for 400 plus metros across the United States. They give a couple bullet points here, but if you go down further, they actually link all the charts. So instead of just hitting the bullet points, I want to actually show you these charts here. So median sales price is still up 16.4% year over year. That's this red line. But take a look. So the red line is actually the median sales price in 2022. The blue line is 2021, and then the gray line represents 2020. So if you go back 2 years, look at 2020. The median sales price nationally was just about $280,000. In 2021, median sales price was right at about, let's call it $340,000, and now we're up to nearly $400,000, and that would be in May, the same time for each year there. Median asking price is $416,000. That's up 17.9% year over year. You can kind of see the data for the prior years here as well. Now, this next chart is actually really fascinating to me. This represents the mortgage payments for home buyers. The average mortgage payment for a home buyer is up to $24.47 per month. And I'm going to go out on a limb and say that's probably just represents principal and interest. But if you look back at prior years, I mean, 2021 average payment was under $1,750, and in 2020 average mortgage payment was about $1,500. So dramatic increase in mortgage rates, dramatic increase in the cost to actually own a home right now. Pending home sales are actually down 6.4% year over year. You can see the sales activity is starting to weaken here. It was actually stronger in 2021. It was a little weaker in 2020. So it's really interesting. We're starting to see sales activity start to roll over. Now, generally speaking, as we go into the summer months, this is when you start to see the market peak. And this gray line here back in 2020, despite this early activity in the pandemic, you can see that July, August, and September were the peak months. Now, if you go back to 2021, you can see that it sort of followed the same trajectory there. The new listings of homes are down about 0.6% year over year. I think we're going to see more and more inventory come online as we move into the summer months, but we'll have to continue to monitor that to see how things unfold. Active listings of home for sale. So this actually represents the inventory at any given time. Now, even though we are starting to see some more inventory come online and we are starting to see some price reductions while buyers sort of back out of the market, we still have very, very low levels of inventory. So according to this chart here, as of May 15th, we had about 566,000 units. That's down 14.8% year over year. If you look at 2021, we had about 670,000 units available. And if you go back to 2020, we had over 900,000 units available for sale. And as you look at this red line, it is starting to go up. To get a more balanced market, I would imagine we would need to start to reach levels that we had prior to the pandemic. So prior to 2020, we probably are going to need to see 1 million housing units available for sale, if not more, in order to truly balance out this market. So homes continue to move very, very quickly. 55% of pending home sales are under contract within 2 weeks. 2021, it was about the same. In 2020, it was down substantially at the same time during the year, but that, of course, is right when the pandemic was hitting. So I wouldn't really look to 2020 as an accurate measure of how quickly homes were selling. In addition to that, 41% of pending sales are under contract within 1 week. So that's still a substantial amount. 1 in 4 homes are still selling within 7 days. That's really fast. 57% of homes are still selling above list price. That is still up over 2021 and way up over 2020. But based on the trajectory here, it looks like that number is starting to roll over slightly. I would not be shocked if as we go into the summer, we start to see that soften a little bit, maybe even come down and match some of the levels we saw in 2021. Now, this is an interesting stat. 4% of listings had price drops. This does not seem like much, but if you look at it compared to prior years, it is up dramatically. And look at the way this line grows exponentially just from March into April into May. We saw a huge spike in the number of price reductions here, and obviously that has a ton to do with mortgage rates rising. And this may be a good indication that if mortgage rates continue to rise, we're likely to see the price reductions climb from here. Now, on the same note regarding price reductions, this is the highest level we have seen since 2019. If you go back to 2019, about 5.5% of listings had price reductions at its peak, and there has been lower price reductions ever since until now. So we'll have to see if this trend here continues. The average home still continues to sell over the list price at approximately 102.9%. So in other words, homes that are priced correctly and they are desirable. They are selling for about 2.9% over the original list price. That is still higher than anything in 2021 and 2020. All right, so that is going to wrap it up for today's video. What did you think of the housing market update and all of the data provided by Redfin? Please leave your thoughts and your comments in the comment section below. And if you haven't done so already, please consider liking and subscribing, and we'll see you on the next video.